Hello everybody, it's Tortoise Investing. Yesterday was my birthday. We're almost at 1,000 subs. We're at 991 right now. If you're new, hit that subscribe button. Drop a like, I greatly appreciate it. I go over all things investing, stocks, ETFs, growth stocks, break things down through Qualtrim Insights. And today we are going to be taking a look at 3 growth stocks to put on your radar, possibly buying now. Always do your own research. I never tell you to just buy and guarantee that these are going to go up, but excuse me, might be something you want to take a look at. Today we're going to be taking a look at Amazon, Ulta Beauty, and Adobe. So yeah, 3 growth stocks to buy now. Amazon.com. We all know Amazon. Probably everyone or most of everybody has Amazon Prime. So I made a prediction about a month before Google actually announced their dividend that I think Google's going to pay a dividend soon. And, well, I nailed that one. So I think within the next year, Amazon's going to join that group. Now, Google's done it. Facebook announced one. Salesforce. Nvidia increased their dividend by 150%. It's now 10 cents a share, and they're doing a stock split of 1 for 10. So, I mean, it's definitely not outside the realm of possibility. I could 100% see them paying a dividend soon. Reason being, look at that debt. Gone. Free cash flow, the free cash on hand, $85 billion. And the free cash flow is growing. And as you see here, quarter over quarter, this negative stuff looks like it's added away. So just free cash flow yield of 1.14%. That does, it's still a little pricey, but it's Amazon. They do a lot of stock-based compensation. But this company is an absolute behemoth. It is just, the moat that Amazon has is crazy. I could talk all day about their moat. Over the last 10 years, their revenue has grown at a rate of 22.68%. Here recently, you're still looking at double-digit growth over the last 2 years, 10.61%. Here's the revenue by segment. And as you can see, this is just growing. And I don't see this slowing down. Their AWS service is on fire. 2021, $62.2 billion. 2022, $80.1 billion. 2023, $90.76 billion. And I'm going to go ahead and say it. I think it's going to be over $100 billion for 2024 with their AWS. It's just going to keep growing from there. Speaking of AWS customer commitments, this is also just growing like crazy, which is great. You know, that's a very important segment for them, and they are already past where they were for 2023 this year. EBITDA is growing beautifully. Free cash flows back on track. Again, they are issuing out that stock-based compensation, which chops into it a little bit. But I think that's going to be something they're going to get figured out and lowered. EPS growth up to the right. Again, the big thing here is definitely that debt. Debt's gone. Cash is just sitting there in the bank. Return on capital employed, 2023, we're setting at 10.15. So this is another thing. I think it's just going to grow from here, especially if they continuously buy back those shares. As you can see here, it's still ticking up ever so slightly, up. But once they start having a net buying of their shares back, that EPS is going to go up, that return on capital is going to go up. I could talk about Amazon all day long. My apologies. And their CapEx expenditures are starting to level out, which is very nice as well. Average EPS estimate 453 growing to 573 for 2024 to 2025. Revenue average 638 billion growing to 710 billion. Those are big numbers. Like Amazon, I really do. Next up, Ulta Beauty. Ulta Beauty's down big. We are talking Dip City. It is the lowest it's been in a while. Let's take a look here at the 5-year chart. The last time it dipped to this area was back in 2023, and it touched down here again. Oh my gosh, back in 2022. So yeah, if you've been looking at Ulta Beauty, now's the time to look even harder. Just free cash yield of 5.44%. Revenue growth at a rate of 15.42% over the last 10 years. Over the last 2 years, right at 14%, so still in line right there at the double digits that we like to see. Number of stores is growing year over year. Very nice. Free cash flow, nice little up and to the right trend. The last 10 years, the last 5 years, growing at a rate of 10.33%. EPS, 23.51% growth over the last 10 years. Very nice. Means they're buying back those shares. And the return on capital employed is beautiful. 2022, 40.47. 2023, 44.42. And 2024, 41.44. Let's take a look at that share count. It's another thing they shine at. This is just dropping almost quarter over quarter. They're nibbling at that share count. As you see, over the last 10 years at a rate of 2.77%. And over the last 5 years at a rate of 3.72%. So they're accelerating how much they buy those shares back. And you know what? I can almost guarantee it that they are buying back those shares right now. Right now. That dip happened, they're buying it. It dips further, they're probably buying it. Another dip, they're probably buying back those shares. And I love that about Ulta. And Adobe, same situation. Again, if Amazon, it's kind of like ticking up a little bit. I don't think they're going to get that under control. But Ulta Beauty, buying back those shares, beautiful return on capital employed. No gigantic spikes here when it comes to their CapEx. And just all in all, I think it's a solid company. It's got great growth ahead of it. Really like what I see with Ulta Beauty. Also like what I see with Adobe. Adobe again in a pretty decent dip here. Let's take a look over the 5-year chart. Did have some super dips back here. I would call those super dips, but over the last 1 year, yeah, you are still looking at up a good bit. This thing shot over $630 there at one point though, so it is coming back down to earth. We're at 483 right now, down almost 17% year to date. I still like it. I think below 500 there is some value there for long-term hold. Revenue growth 16.95% over the last 10 years. Revenue by segment, as you see here, this is broke down digital experience, and published advertising up and to the right. And I think that this is going to be a tick up once the year is over. Total performance obligations, all of these are ticking up and to the right every single year over year. Free cash flow growing at a rate 21.83% over the last 10 years, 13.03% over the last 5 years. We do have a little bit of leveling out here, but I don't think it's anything to be worried about. They're going to take right back off. I'm more than confident. Stock-based comp, not an issue. It's there, but it's not that bad. EPS growth over the last 10 years, 35.67%. Over the last 5 years, 17.87%. Again, you got a little bit of evening out here. But I think it's going to take right back off. Debt, $7.84 billion. Cash, $7.84 billion. Debt is $3.56 billion. Take a look here at the quarter over quarter. They paid that off some. $6.82 billion in cash, $1.76 billion in debt, which is beautiful. Amazing finance sheet. Shares outstanding, similar situation with Ulta Beauty, just dropping ever so slowly. And again, I can about guarantee you right now that they're nibbling at that share count and getting it lower and lower, which I love. I just love when companies buy back shares. Return on capital employed, 2022, we're setting at 22.57, 2021, 28.57, 2022, 32.03, and 2023, 30.089. So, very nice return on capital employed, decreasing share count, and their CapEx is even out. It does look like they're paying a little bit more year over year for some things. Take a look what this might be. S&M, G&A, R&D. I'm not 100% sure what those are, so I'm not going to pretend that I do. But as you do see, their expenses are growing over time. Let's take a look here at the EPS. EPS, big growth here. Average 2024, we're looking at $11.88 median, and for 2025, $15.99 on the median. So that's more than double-digit growth. It's very nice. Revenue is $21.46 billion for this year, growing to $23.95 billion for next year. So very nice growth out of them as well. Adobe's very solid, great company, subscription-based model that they started back in 2013, I believe. And as you see, once that got established, off to the races. And same thing here, 2013, they established subscription-based model, bam. And I think they got a great future ahead of them. I really like Adobe. I really like Ulta Beauty. I don't know if we took a look at the EPS for them or not. Here's a quick glance at the EPS and revenue for Ulta Beauty. You can pause the screen. Yeah, 3 solid companies that I think would fit into most portfolios. Again, always do your own research. Make sure those are the right fits for you. Again, like and subscribe if you haven't. I greatly appreciate it. Until next time, I hope everyone take care. See yous.